Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark will take a look at what's shaking in the markets. The founder of MauldinEconomics.com, John Mauldin, talks about whether we'll face another recession, how the velocity of money affects the economy, and how close so many of us are from being tossed into the street. He also suggests how tax reform should work. Plus, at the end of the show, we'll have company showcase updates with American Manganese's Larry Reaugh, Cascadero Chairman Bill McWilliam, and Aben Resources' Jim Pettit. We'll talk to Ross Clark right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Taron property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, Cascadero.com, or phone us at 604-924-5504.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Always nice to be with you, Jim.
That little Canuck buck, the currency that could, at least so far this year.
Yeah, the loonie that nobody liked. Not only, well, if I got to think back, it's only a matter of 8 or 10 weeks ago that we were trading at 72.5 cents U.S., and here we are closing off the week at 80.5. So you've got an 8-cent rally. You've got relative strength index at an extreme. You got up to 83 on the RSI the early part of the week when we had the first spurt, and then we had a little pause midweek, and at the end of the week it rallied back strong again. But the currency action that we're seeing not only in Canada but also over in Europe and in the States, kind of dwarfing what's happening in the equity markets. You know, you've got U.S. equities, the Dow, the S&P trading into all-time highs once again this week. But if you're Canadian, you're looking at the S&P being actually down on the year. If you're a European, or down from the highs, I should say. If you're European, it's actually in the process of testing the lows of the year because you've had such weakness in U.S. dollar and strength in euros that it just clearly offsetting the price action that we're seeing in terms of equities. So times are a little tougher than they used to be if you're an international investor.
Why has the Canadian dollar done so well lately?
Well, it turned before the commodities did, but if we take a look at the various commodities out there, the oil market bottomed in June. The Canadian had bottomed about 2 or 3 weeks earlier, but the oil market bottomed out at $42, and that had been a target we had worked with. Typically, the oil market after a bear market move, such as we had into the first quarter of 2016, it will rally for 12 to 15 months, and then it will settle back and test the low that it had prior to the last low prior to the rally. So that was a $42 target. That was minimum for us. We thought it could actually go a little bit lower. It didn't. So you've had this reversal in the oil price going from 42 up to $50 as of the end of the week. And you've had base metals make a good move. We've had copper do exceptionally well. The grain markets managed to get up off the bottom. They've run out of a bit of steam here, but had an exceptionally good move from May through the early part of July. So the commodity side of the equation has been very supportive. And then when you go over to the interest rate side of the equation, you've got Canada in the process here of starting to raise rates and being much later than the Americans in doing it. And the American rate structure looks like it's not going to have all that much more on the upside, whereas the Canadian has some. So you've got that flow of capital that's moving here. So when we take a look at the type of strength in Canada, this 8-cent move off the bottom with the high relative strength index, and you go back historically, coming off bottoms, once you've had relative strength that high, you typically would then enter into a consolidation phase, but it doesn't start immediately. You tend to have a few more runs towards the top end. Maybe in the case of the dollar right now, we're at 80.5. You probably look at 81.5 to 82 as the upper area of resistance. And then it very, very consistently has given back a quarter to a third of the gain. So if we rallied 8 cents off the bottom right now, realistically, look for about a 2 to 3 cent decline. If it manages to tack on another cent or cent and a half from here, you're probably looking at more of a 2.5 to 3.5 cent pullback, and take a second look at it at that point. But I think if anybody's looking to convert Canadian dollars to U.S., probably a pretty attractive week coming up here.
How are gold and silver doing for us?
They have, once again, this gets down to currency. Against the U.S. dollar, the gold market has had a very good run right now. So has the silver market. They are, depending upon how you draw your trend lines, and if you've got a semi-log chart or an arithmetic, they're starting to break out through the resistance lines coming down from 2011. But that's when priced in U.S. dollars. If you're in other currencies, it really hasn't had too much here on the upside. But from a U.S. perspective, we look at the commitment of traders numbers, which had been very, very constructive for the last month or so, with commercials holding very small net short positions and the speculators very small net long positions. Those have started to move as of this week. So we're starting to see a little bit of participation by speculators on the long side, but it's very, very marginal. So still has to be viewed as constructive as far as the COT numbers are concerned. We're not seeing the stocks perform that well. They're just grinding along with the bullion, so there's no strong leadership in there. So I think that for all that there's upside bias, I don't think you're looking at a market that's ready to run away.
Ross, thank you so much for being on This Week in Money.
Always nice to be with you, Jim.
My guest has been Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Coming up, John Mauldin, next on This Week in Money.
Always consult your investment professional before making any investment decision.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is John Mauldin, founder of Mauldin Economics. You can find them online at mauldin.economics.com. He's speaking to us from Las Vegas. John, welcome back to This Week in Money.
You know, it's always good to be with you guys. I have fun every time we do it.
Well, we love picking your brain because it's most pickable. I don't know if there's any other word for it. John.
Well, thank you. You're very kind. Thank you.
John, we hear the Dow might go to 40,000 and then, of course, the inevitable crash when you have a huge bubble. What do you see ahead for the Dow?
You know, I don't. And the reason, I don't is I think trying to, make market calls today is really difficult. And the best thing to do is what I'm trying to get people to do now, which is to diversified trading strategies and not care whether the market goes up or down, as opposed to being tied to the market all the time, and, market performance. So, but that's easier said than done, but that's what I'm trying to help people do.
Is one of the problems that the markets are so manipulated by quantitative easing and other tricks of the trade?
Oh, absolutely. I don't think there's any doubt. And so, we keep, being in new territory. So you can't really, make any, real prediction as to what's happening, market forecast. Valuations have gotten all out of kilter. So all you can really do now is just, to the best of your ability, try to manage your portfolio in a way that you don't get stuck, being long when the world is telling you that it's a short world. So, and that's, like I said, it's easier said than done, but that's what I think people should be doing now, is try to figure out how to trade their way through the markets and the volatility rather than being tied to it.
In order for price earnings ratios to normalize, how far would the stock market need to drop?
Probably from where we are today, and that, part of it is you have to have a handle on what earnings will bounce, because if you have a recession, then earnings get hit. So you have to have an idea of how deep the recession is, what the recovery will be like, but typically you'd want to say at least 35-40%. But I'm afraid this next time, because there's so much money that's moved into passive investing, into index investing, and away from active management, that when the average person starts feeling pain, there's a 20 or 25%, and then they start hitting the panic button. Well, then it tumbles really fast, and it goes a lot further than down 40. And I think you've got to be very careful of what the markets could do to you.
Some people have advised now would be a great time to cash out and wait for the bubble to burst, and then, of course, pick up the pieces at a reasonable price.
Well, and that's a strategy. If I can tell you that, basically I have a group of ETF traders that run money for my clients, and we manage. And in February, they were 95% long equity markets around the world. Today, we're like barely over 50. So they've been taking chips. Their systems, not they have systems that are telling them to pull some chips off the table. So we're much less bullish today than we were 5 months ago. And that's been slowly, they're slowly nibbling away at their long market exposures. So it's tough to, you don't know what a quantitative system is going to do, because you've got to look at all the inputs. But we're still, net long the market, but we could turn around and be very bullish 2 weeks from now, or completely out, just according to what the systems say. So if you had looked at the ratios or listened to your gut, you might have tried to get out last December or February, when you'd have missed some of the market, and then you start saying, well, I missed it, when do I get back in? You've got to have some system. And you can use if nothing else, just use a 200-day moving average. You need to have some non-emotional system that says, when am I going to get in? When I'm going to get out? What's going to make me pull my triggers? I have some stock holdings that I'm not going to sell. I'm perfectly willing to let them go down. They're biotech stocks. I think that they're really, truly long-term for me. I think of them as, 10 to 15-year holdings, not 10 to 15 days or hours. And that, I think, with everything else in my portfolio, is fine. The bulk of my personal portfolio is in relatively liquid, but also trading. They're not. It's not long only stuff. Other than my biotechs, I have nothing that is. I'm committed to being long only for a long time. We might be partially long today. As I said last February, we were a lot longer. But you've got to have a system that says, this is when I'm going to hit the exit door. If you just try to say, well, what do you think? Or you listen to somebody on TV, or that doesn't work.
A game plan's always handy.
You got to have a game plan.
Do you see a bear market and recession on the horizon?
I don't see a recession on the horizon, but if the horizon is 3 months, 6 months. But I'm writing in my letter today, and let's just do a quick plug. You can go to Mauldin Economics and sign up for Thoughts from the Front Line, stick your email address in, and you can get it for free. I'm writing in my letter today from in Vegas, or it'll be tonight as I'm writing, about the things that worry me, the things that could nudge not just the U.S., but a total global recession. Problems in Europe, problems in China. Frankly, I'm concerned about President Trump and his potential to start a trade war. The things they're talking about doing aren't very good long term for the economy. So I was writing about that last week. But
I saw a Chinese newspaper editorial saying that American mismanagement will make China great again. Is that something the U.S. should fear?
That's a great line. I would love to see that. But there's a lot of really good things that I like about President Trump. But his advisors on trade are not something that I'm comfortable with. You have to be very, very careful. If you go back to President Bush in 2002, he put a 30% tariff on steel, trying to protect the steel industry, 140,000 steel workers. Well, 200,000 people who were using that steel in terms of for their jobs and their businesses lost their jobs within 12 months. There's no free lunch here. There's pushback. China isn't even in the top 10% of countries, the top 10 rather countries that we import iron from. And we're always complaining about China and there's not too much iron capacity, but they're not who we get our steel from. We get our T-shirts from them. We get our iPhones. And an iPhone, which is 100% when it comes in, is counted against China's trade deficit with the U.S., but only 7% of the cost is actually due to the Chinese. The rest of it's coming from Korea and Japan and some in the U.S., and it's just assembled in China. You got to be real careful when you start talking about trade deficits and equating them with problems. I mean, we have a trade deficit with Canada. I don't think there's any reason for us to complain about what goes back and forth. Boeing is complaining about Bombardier planes being sold, and they want, tariffs or injunctions put on Bombardier. But Boeing's planes that are manufactured in Charleston are, more than 70-80% manufactured in pieces from around the world and shipped there. So it's counted as an American product because it's manufactured in its final form here. And we get a lot of it from Canada. You have to be very careful about saying you can buy a plane here, you can't, you can do this part but not that part. First of all, we don't really have free trade in the world. We have managed trade. I know what free trade looks like. It's a one-page piece of paper. When the TPP was going to be 2,300 pages, that's not free market. That is a negotiated market, and maybe we need to be better negotiators. I understand that, Mr. Trump, but negotiate, don't impose tariffs.
Wouldn't it be better for Canada and the U.S. and perhaps Mexico as well? NAFTA, some people have described to me as perhaps one of the best trade agreements ever written up, and it's okay to tune it up and fix it because it is an old document, but don't rip it up. That seems to be Trump's reasoning for everything. Oh, if it's not working, just rip it up.
I'm not sure that it's not working. There's a lot of people, net, both Canada and the United States had created NAFTA created jobs for them. Now, in both Canada and the United States, NAFTA, jobs were lost because of NAFTA. But on the bulk, both countries have done well. Both countries have seen jobs go up, and I would be really hesitant and very vigorously oppose ripping up NAFTA. I mean, maybe you want to negotiate some fine points. It was, after all, 24 years ago, but or something like that. I mean, so maybe you could update it, but you need to be very careful about what you do there because the system is working, I think.
You said there was a trade surplus Canada into the U.S., but coming back the other way, the U.S. has a services surplus when dealing with Canada.
Oh, no question about it. And some of that trade deficit that's coming our way is oil, and that's going down. Because we're producing more. So, I mean, I'm just not as concerned about that. I would be concerned if we start a kind of tit-for-tat trade war, where we're going to put tariffs on this or that. I mean, what it means is consumers pay more money. When we put barriers to Canadian lumber, consumers are paying more to build a home, to do whatever that they're using that lumber for. And those are American consumers, and somehow or another, we're more worried about a few lumber jobs than we are about the overall good for the American consumer. I actually worry about the consumer more than that.
We'll have more with John Mauldin next on This Week in Money.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN.AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with John Mauldin, the founder of MauldinEconomics.com. John, is the U.S. dollar in a bear market, and is that a good thing?
I think it's in a, it's gone back to where it was. So it's made a full circle. I would expect it to get stronger as the Federal Reserve continues on its rate hiking. I'm pretty happy, as an American citizen with where the dollar is today. I don't necessarily feel that it needs to be that much stronger.
The Canadian dollar is now almost 80 cents American. Is that one of the concerns with trade, is that Canada might have an advantage because it has a lower dollar than the U.S.?
That might be some advantage, but I don't know if it's going to be that much. We've seen the Canadian dollar at 60 cents. We've seen it at, $1.10. I think those things even out over time.
Could interest rates move higher and faster than we think?
No, I think that if anything, interest rates might go lower than we think. Not on the short end. The Federal Reserve is seemingly very committed to raising rates. They want to normalize things, and they waited 4 years too long, and now they're trying to play catch up. And what's going to happen, and the reason they're doing that is they know that come February, Trump is basically going to be able to appoint 5 to 6 of the governors. It'll be a Trump Fed, and they don't want to be seen as not doing the heavy lifting, as being the people that the new Federal Reserve Board would be pointing fingers at, saying they didn't do what they should have done. So they're trying to catch up now, and they're thinking about their legacy, and that's a good thing to think about. But they weren't going to raise rates under Obama because that board was all Democrats. They were appointed by him. And now that it's President Trump, they feel perfectly comfortable risking the direction of the country.
When Janet Yellen said we won't see a financial crisis in our lifetime or unlikely to see one, was that a responsible statement?
I was in the Virgin Islands on my honeymoon. I just got married 3 weeks ago. I basically talked about it the last time we were having our interview. And I read that statement, as it came through, and I'm going, tell me she didn't say that. That's going to rank right up there with Ben Bernanke talking about we've got the subprime crisis contained. Chamberlain's, we have peace in our time, when he came back from Germany with a document from Hitler. It's one of those, really? You said that? We'll have another financial crisis, but in her defense, it won't look like the financial crisis we had the last time. It'll look completely different. Our banks have been recapitalized, so the next crisis is probably going to be liquidity in the bond market.
Are you bullish on gold and silver?
I'm kind of neutral on silver. I would, if you don't have any gold, you should get some. I've got some in a vault at the bank, and I guess you would know I was getting nervous if I ever went to the bank and said I'd like to take my gold home with me now. But I think of gold as central bank insurance because central bankers can do silly things, and even if Trump appoints a more conservative Federal Reserve, if we get into a recession, there's going to be this massive felt need to do something on their part. And with rates as low as they are, they can cut rates a few times, but then they've got to, the only tools left in the toolbox are more quantitative easing, and it'll take a massive amount of quantitative easing, or to go negative on the rates like you've seen in Europe and Japan. So I would hope they don't do something as silly as make the world's reserve currency a negative interest-bearing currency. But you just don't know what central bankers are going to do when they're pushed into a corner and there's a crisis and they feel the need to respond.
It seems to me negative interest rates have been devastating for the European insurance and banking industries.
Oh, it was devastating. Absolutely ripped them apart. One of the worst things that ever happened to them. I mean, and the problem that they've got now is poor Draghi has bought nearly every bond that he can get his hands on. He's buying corporate bonds. He's actually going into the private market. And so when a large company wants to issue a bond, they'll buy them right at the issue. They're printing money with anything that isn't nailed down. They're going to buy Greek bonds when they're issued for, why anybody would lend money to Greece for 5 years. But then for some reason, Argentina was able to sell 100-year bonds. So, anybody that would lend money to Argentina for 100 years is just not paying attention.
Well, in Japan, the Bank of Japan is buying up stocks at such a rate that they'll be the majority stockholder in 50 of the country's biggest companies.
Oh, yes, absolutely. And something like, I forget what it is, the Swiss National Bank has something like 3 or 4% of many of the large indexes in the U.S. They've just been buying U.S. stock indexes. They've been buying anything that's not nailed down because they are trying to hold the price of the Swiss currency down because everybody wants Swiss francs. That's why they have the lowest negative rates in the world, because they really don't want you holding Swiss francs. They're trying to get you to leave the country with their currency.
Is China still snapping up every piece of gold they can find? And if they are, what's the strategy behind that?
Well, they're buying up their own gold that they're producing. So they don't have that much gold. I mean, I'm sure that's, has a positive effect on the price of gold, but the expectation that somehow China is going to drive the price of gold and that's why you should buy it, I think is unrealistic.
Is the velocity of money an indicator for future economic growth?
Yes, absolutely. Now see, sometimes I can actually answer a question when you ask it, without trying to hedge or say, maybe or not so. But absolutely, the velocity of money is telling us that bond interest rates aren't going to be going back up on the long side anytime soon. We are now at levels we're approaching levels of the velocity of money that we haven't seen since the 30s. I mean, the velocity of money is now down to its lowest level since the end of World War II. It's been dropping for a long time, not just under Obama. It was dropping under Bush. And that, I think, is a function of the massive amount of debt that is involved in the U.S. Debt is future consumption brought forward. It's consumption that cannot be done in the future. And so what's happening is that that is signaling the markets that growth is going to be lower than we like, and that's why people are not flipping through their money. That's why the velocity of money is not going down. It's not that banks don't have money to lend. They just don't have any good borrowers. Credit card debt defaults are rising. Student loan defaults are rising. Home loan. I mean, there's problems in consumer land, and it's all tied to the velocity of money. So that's a spot on question, and that's a very sophisticated question because not many people get around to the velocity of money and its importance. Good question, sir.
A survey found something like 27% of Canadians felt that if they had to pay $130 more a month for things, they'd be in trouble. Is that an indicator of what's going on?
That is not unlike the situation that we see in the U.S. 47% of Americans have less than $400 in cash in reserves. That means their one tooth infection, one blown tire, one unfortunate event away from having no cash and having to figure out what not to pay or what to defer or what to sell. That's a really sad thing. And when you look at how poorly prepared baby boomers are to retire, it is no wonder that in the U.S., the largest number of over 70-year-olds that we've ever seen in history are actually working and in the workplace. They have not retired. Now, some of it's because, I'll be 68 here in a few months. And this is when you're supposed to say, well, you don't look it, John. But we're on a radio, so I guess that's, hard for you to point out.
You don't sound like it.
I'm not interested in retiring. I'm launching new businesses. I'm doing things that are going to keep me involved and committed to my partners that are in the businesses for the next 10 years. And I'm perfectly happy to do that. So there's a lot of boomers who aren't retiring because they just don't want to retire. They're having too much fun. But there's a lot of boomers that are retiring because they can't afford to retire. And, when I get somebody that's 55 or 60 years old come to me and say, we've got a plan for retirement, and they show their numbers, more often than not, I say, well, you need to plan not to retire. You need to plan to work longer to make your money last longer, and you need to be saving more. People don't, and number one, people don't understand how long they are likely to live. The new drugs that are coming out on the market, I know that this has been kind of sounding like I'm a bearish person, but I'm really optimistic about the future of mankind. It's governments I worry about. But as human beings, we're going to have such massive access to new technology, to new biotechnology, to things that are going to make our lives better. We're going to increase our health spans. We're going to be able to live longer, and that means you're going to need more money than you think you're going to need.
We'll have more with John Mauldin next on This Week in Money.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, AMY, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
I'm Brian Fowler, President of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with John Mauldin, founder of MauldinEconomics.com. John, when we take a look at what the future is going to bring to us, robotics, artificial intelligence, right now the biggest money maker for governments is income tax from the people who work in these businesses. What happens when the robot takes over the job? Where's the government going to get money?
Well, I think it was Bill Gates said that we need to tax robots, but Jim, that's where I'm not optimistic. We are going to get to live longer. We are going to have so much cool toys, but the government's going to need more money. The next recession, the U.S. national debt will go to $30 trillion before we turn around and look at it. Then they're going to need to, interest rates. Interest costs are going to go up. They can't seem to fix the healthcare crisis. The amount of money that we're going to have to put in pensions. I fully expect that we're going to have in the U.S. something that all Canadians are familiar with, a value-added tax, which I think we should be doing and lowering our income taxes. But that's not what Chairman Brady of the House Ways and Means Committee, I've sat and talked with him. He wants to do a border tariff tax. But we should just go ahead and do a full value-added tax and drop income taxes as low as we can. Because one way or another, eventually, the Congress is going to have to raise taxes to be able to pay for our pensions and insurance and Social Security and all of those things.
What could cause an asset price collapse, and is that a concern?
That would be a big concern, because what would happen is that the pensions now, for instance, California is only 68% funded in its CalPERS and CalSTRS and its big pension plans. If there was a regular bear market, 40%, down move in the market, all of a sudden CalPERS would be 55% underfunded. Only funded, say 55. That would be huge. That would cost California tens of billions of dollars to bail out their own pension systems. And by the way, that means the local communities and educations and school districts would have to raise their taxes, as well as the state having to raise its already high taxes, to bail out the pension systems. Illinois just raised taxes by $5 billion. That's a lot of money it's a big state, but it's not all that big. It's not all that rich. And that $5 billion does not bring the Illinois pension fund into balance per year. They actually need $7 billion more per year. All they can get through is a $5 billion increase, and it doesn't get them to where they need to be. There's a crisis coming in U.S. pensions. There's a crisis, and it's just going to only be made worse by a recession and a bear market. So in my mind, there's always another recession that's going to happen. I don't see it today, but we know from history there's always another recession. And when that happens, it's going to be a problem for pensions, for retirees, for all these people that have stuck their money into passive investment systems thinking they'll be able to ride the market out, thinking the market will recover. That's just not the way the world works.
Can the Fed combat debt bubbles by printing more and more money?
They will try to. I think ultimately, and this may be why you want to own some gold, Jim. I think ultimately all of the major central banks are going to have to monetize their national debts. The only way Europe can stay together is to basically mutualize all the debts on the balance sheet of the European Central Bank, and pinky swear that this time we really will start balancing our national budgets. But otherwise, I mean, if the debts are going to be so big in Italy, France, and other countries that they won't be able to survive without monetization of debt. Same thing's going to happen in Europe. At that point, then every other country that's got any size of debt will feel the need, because that will mean our currency will go down against countries that are not printing, especially emerging markets. I think you'll see Canada monetizing their debt in order to maintain the value of the currency. Nobody really wants the dollar to get that strong, or they don't want it to be too weak either. We need to keep our currencies within a band that we can work with. And I'm afraid that 5 years out, 10 years out, the Federal Reserve actually says the only choice we have, the U.S. government, Congress says the only choice we have is to monetize debt, because they just have too much. And they'll have to restructure everything. It will probably happen under a Democratic administration. Could happen under a Republican administration, I don't know. But it's going to be not fun for anybody.
Are banks causing deflation by increasing loan requirements?
No, I don't think so. They have to be responsible. And so, that's not a deflationary move saying you've got to be able to pay your money back. That's just being responsible. What's causing deflation is basically, the demographics in the U.S. We're getting older. We're not having as many kids. And we're not quite Japan yet. But look how much Japan has monetized their debt, how much money the Central Bank of Japan has printed. They pulled 35% of their debt, which is huge. I mean, more than their GDP, onto the balance sheet. And they're continuing to do so. And they've had no inflation whatsoever. The problem is that older people tend to spend less. They don't borrow money. It's families that are have new homes, babies, kids. They're the ones that spend money. They're the ones that go out and take a little bit more risk, that borrow, that have to pay for college education. Retirees don't. And we're in a generation now, the baby boomer generation, where we have more and more retirees. That is, in and of itself, is deflationary. The next recession will, in and of itself, be deflationary. I frankly think in the next recession that we see the 30-year U.S. bond go to 2%, even without negative interest rates. the 10-year bond goes to 1%. The personal bet I've made, and I was 4 years ago when I bought my apartment. I took a 5-year mortgage out. 2 years ago, somebody came to me and said, I'll, cut your interest rates a bunch if you'll take out a new mortgage. And so I said, well, I mean, it was enough that it made a difference in the balance sheet every month. So I remortgaged myself for another 5 years. So I'm betting that when we have the next recession, that interest rates are going to drop to what I think will be a very long lifetime low. I think we'll see the lowest rates historically ever in the United States, and mortgage rates, and I'll be able to go out 30 years for what I think of as ridiculously cheap money, and I'll just back the truck up and say, give me all you got, and gladly take it, because I think I can do better than 2 or 3% on my investments than I can on my mortgage.
What do you see ahead for geopolitics in a Trump world?
Well, the big thing in geopolitics is what's Trump going to do about trade. If you really stop and drop back 20 years, under Clinton, under Reagan, under a Bush, under an Obama, the U.S. approach to geopolitics hasn't really changed that much. Countries are constrained by reality and by the other side of their partners or their adversaries. I think right now Russia is in the position of the theoretically rich man that's run out of money, but they have to keep spending money in order to give the appearance of being rich. They're trying to have the appearance of being powerful when they're really not all that powerful, and they're running out of money. At $40 oil, at $45 oil, they can't afford their country to run their country because that's their biggest income producer. They've had to actually cut their defense spending. And they're going to have to cut it again because oil's not going up anytime soon. I think the price of oil has more influence on geopolitics than Trump does. It's certainly affecting the Middle East. It's certainly affecting, one thing after another. I live in Texas. Price of oil makes a difference. I can see the price of homes fluctuate, of high-end homes, I should say. I can see the price of high-end homes fluctuate with the price of oil in Texas. So, price of oil has a lot more influence, I think, than presidents do on geopolitics.
If you were Trump's top advisor for a day, what would you tell him?
That's a really good question and a very tough question, and it would have, I'd have 3 or 4 answers. Number one, do what you said you were going to do, negotiate. Go start negotiating actual trade deals. One-on-one, as many as you can. You want to make America great again? Get America working by negotiating trade deals. I would tell him to call Paul Ryan and McConnell and Chairman Brady into the Oval Office and say, guys, I want a tax deal. I want it now. I would, and I want a radical tax deal. I would tell him to pass a value-added tax, let's say 15%, then go to a 0% Social Security tax, so that gives everybody at the lower end of the income scale a pay raise immediately because they're not paying 7% out of their pocket. Small businesses get a 14% decrease of their first $120,000 or $130,000 immediately. yes, we're paying a 15% VAT, but you can make sure that lower income people are compensated for that. And that would allow you to slash income taxes to 20% over 100,000. Everybody under 100,000 wouldn't pay any income taxes. I would do something radical like that. That would be something that would jumpstart American business. That would fuel us into the next decade. But, you know, you can't get Republicans to agree on the time of day, let alone what taxes should look like. I would do everything I could to get that done. Healthcare, the problem is nobody wants, I mean, we want two things. We want cheap healthcare, but we don't want to pay for it. And Canadians know that healthcare costs money. And we don't know that in the U.S. We keep thinking there's something like free healthcare out there that doesn't cost taxpayers money. But that's just not the case.
John, you talked about we should plan for very long retirement. What kind of things health-wise do you think we're going to see that will make that very realistic?
There are drugs in the process, and I'm very tied into the biotech world, into the development world, into the anti-aging world. I work with some of the leading anti-aging companies in the world, some of the leading researchers in the world. I'm on some of the boards. And I'm telling you, we are further along today than I ever thought we would be. I actually went back and somebody did a Canadian, by the way, did a kind of a mini package of my speeches over the last 5 years to for a promotional effort. And he's a really top-notch professional. I love coming to Vancouver because I get to be with him. But one of the things I said was that the ability to turn you younger was 25 years out. And I said this now 4 years ago. Today I'm telling you it's 15. And that may be something that I'm going to have to come back and tell you 5 years from now. Well, guys, we're almost there. The leaps in technology that we are making in the anti-aging world. I mean, there are drugs that will come online in 3 or 4 years that are going to extend your middle age, your health span. So it won't be the fountain of youth. They're not going to turn you young again, but it's going to be the fountain of middle age. And right now it's 67 years old. Middle age sounds really good because we think of middle age as being your 50s. And the effects we're seeing on the human trials are just unprecedented. The company that I'm involved with, we're 12 months into human trials on cancer, and we haven't had anybody die. This is phase 1. And we've just only recently gotten to effective doses. I don't believe we'll have cancer in 5 years. It's a problem in this world. And it'll come to the U.S. and Canada first. And we're going to see one thing after another. Cirrhosis of the liver, Alzheimer's, dementia, arthritis. We're going to see one thing after another go away. The type 2 diabetes, the fat problems that we're seeing in the U.S., which it's just epidemic. I'm here in Las Vegas, and it seems like every other person is 50 pounds overweight. I mean, it almost embarrasses me to be here and say that this is America. But that is going to go away. We're going to have cures for it. I mean, there are some things that I don't see cures for. I'm very involved with type 1 diabetes because one of my kids have type 1 diabetes. And that's a genetic trait. I adopted 5 kids. And so you don't know what the genes are going to do. But that type 1 diabetes, because if you look at him, he's the healthiest kid in the world. He's big, strong, 34 years old. But we're in an emergency room every 3 to 4 years. Every 3 to 4 months. And I don't see any magic cures coming on the market yet. So it's not like the world's going to all of a sudden change and we're going to be great. But we are making leap and bounds improvement in the potential for technology.
John, how can people find out more about Mauldin Economics?
You can just go to Google John Mauldin, and go to Mauldin Economics. That'll be the first thing that'll pop up. And put your email address in, and you can go around and surf the website if you want to. Put your email address in, and just you become one of my 1 million closest friends, and I'll send you my e-letter for free every week. So you can get my letter is called Thoughts from the Frontline. I also send you other people's free letters. We're really good at giving a lot of information for free that other companies want to charge high ticket for.
John, thank you so much for being on This Week in Money.
Jim, it's always a pleasure to be with you. I can't wait till our next time. You do a great job. You're one of the best interviewers on the entire planet.
Well, I have to give a lot of credit to my executive producer, Tom Allen, because he likes drawing up lots of questions for me as well.
Well, and Tom is really good at that, and I always like being on with Tom as well. So one day maybe we'll all three of us get and we'll just have a great conversation.
Next time you're in Vancouver.
Okay, that'll happen.
My guest has been John Mauldin, founder of MauldinEconomics.com. He was speaking to us from Las Vegas. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark and John Mauldin, and thank you for listening. Stand by. Right after the show, we'll have company showcase updates with American Manganese CEO Larry Reaugh, Cascadero Chairman Bill McWilliam, and Aben Resources Jim Pettit. If you have any questions for the show, you can email us at info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. We're chatting with Larry Reaugh. He's the president and CEO of American Manganese. Welcome back to the show, Larry.
Well, thanks, Jim. It's always a pleasure to be on the show.
What kind of new things do you have to tell us about American Manganese?
Well, it's the news release that we put out yesterday that talks about, what direction the company's going in. Kind of a mini sketch of a business plan that we're developing. And, of course, we know that our recycling works. We're past that proof of concept work. We are looking at building a pilot plant, which will be done out of the flow sheets that go into the final patent application. And that pilot plant will eventually allow us to scale up to a commercial-sized plant, and then we can really start talking about dollars and cents. But in the meantime, I did point out in a press release that there is a source out there, and I've talked about it before on the show,
but I didn't really, it really was not explained fully to the listening audience, just that scraps 10% of all the electric vehicles that are made in the electric vehicle batteries, 10% of it ends up as scraps, which means they're rejected. And they're rejected before they ever go into a battery because they run a huge batch of foils with cathode material on it. They run a huge batch of batteries out of that, which is a small percentage of the foils that they run. And if there's something wrong, if there's some defect in the battery, all of those foils are scrapped, and they end up in a recycling yard and eventually burned. And they represent about 10% of all the battery manufacturing. So what I pointed out that in 2015, according to the Cobalt Institute, 41% of all the cobalt material that was produced was taken up by the battery industry, and they expect that to go to 75% by 2020, to 65% by 2025. That's a significant amount of cobalt. So you can see that there's got to be more supply of cobalt coming on. You look around in the short term, there's not any immediate solutions. And, they put recycling kind of on the back burner by saying they're going to start using batteries for second use. So, rather than wait for the batteries to deplete and become available and maybe end up in second use, we're going to focus strictly on the scrap material, which could represent up to 4,000 tons of cobalt, and double that in the other amounts of cathode material that would be on there, like nickel, lithium, manganese, and aluminum. So, that's a big market. I mean, it's a huge market. It's not a very big plant. Maybe, just as a rule of thumb, if you were looking at a plant, it would produce 4,000 tons of cobalt a year and 8,000 tons of other cathode material. You're looking at a plant that would be probably around 50 to 60 tons a day. Not very big. And and the other thing, the real benefit that I'd like to point out to the shareholders of this thing is that we don't have to go into disassembly, and which would mean a lot of robotics and everything like that, and that first plant would be quite expensive. We'll be able to, if we can get our hands on the scrap material and recycle that, that will give us all the cash flow we need to actually do an in-depth study of how to disassemble all types of batteries and put them into solution, put the cathode material into solution. So we look at this as a win-win scenario, not just for the company, but for the battery manufacturers. You could have a supply of at least 4,000 tons of cobalt being added to the market each year, and that would only increase as time goes by. And, that could end up being 5,000 or 6,000 tons by 2025, maybe even higher. So, and the value of 4,000 tons of cobalt is $230 million. If that's not a robust attraction for making this recycling opportunity work, I can't think of anything that wouldn't be. So that in the press release, we went into some detail on on the pilot plant. We went into some detail on the value of the scrap material. We didn't put a value to the other materials because until we can do an in-depth study on that, I can't put a value to it. But it's going to increase the value, and it's as simple as that. One thing I'd like the shareholders to look at is those that have been with us since the days of low-grade manganese and the Tillery Peak, when we first started developing a process that would treat ores that were grading 2 to 3%. We were looking at a plant doing 7,500 tons a day to produce 50,000 tons of manganese, and that was a pretty massive plant. And, it also had an open pit attached to it. And, it was a full-scale mining operation. And you had to put through, at 2% grade, you'd have to put through 50 tons to get 1 ton, or 50 tons to get a ton of manganese. You got to remember that what we're looking at in cathode material is 100% purity in all of the cathode materials. So there's no waste. There's no mining that's involved. It's a matter of shipping and receiving the recycled material wherever you have your plant and putting it into the process. It looks simple, but it's not as simple as that when you look at how the patents work and everything else and how you end up getting 100% purity and 100% recovery of these metals. And if it was that simple, people have been working on it for the last 10 years would have done it. It was just that we were in the fortuitous position of having spent a few $1 million on the low-grade manganese solution that addressed some of the problems that everybody runs into when they're trying to recycle the lithium-ion battery recycling proposal. So when you look at the press release, you can take a pen out of your pocket, you sit down and start doing some number crunching. And I'm pretty sure that you'll see that this thing makes a hell of a lot of sense. So that's what the press release was all about. It's been picked up by some of our more prestigious newsletters out there that report on recycling daily, like Recycling International did an article on us out of that press release. And that's good to see. We're starting to get some exposure in the mainstream that way. So that's it in a nutshell. I would hope that the next podcast that we do will maybe we'll do some more question and answers, and rather than just have me kind of go on a rant here. But that ends the week. We had a lot of selling and pressure from one house that was obviously wanted us to know that they were driving the price down, which they did. And they've accounted for 80% of the volume in the last 3 days. And so it's anybody's guess whether it was a large shareholder selling, which I can't see why they'd drive the price down to get their money, but or whether it was predatory trading. But I'll leave that up to everybody else to surmise.
Larry, where is this pilot plant going to be built?
It'll be built in Richmond at the research contractor Cametco's facility there. They've got a huge facility, and that'll be the pilot plant. Now, remember, the pilot plant is a small scale, and it's just to show that this can be recovered on a continuous basis. Now, we've built pilot plants before, so we know all the obstacles and all the upsides and downsides. And so has Cametco. They've had some pretty big clients on pilot plants beside us. So it'll be built in Richmond and tested there, and probably the first plant will be built somewhere like with Cametco Research. We want all the engineers that are involved in this work to be on the final design. But what that pilot plant does, again, it lets us scale up so we can have a commercial-sized plant. And again, I just want to point out to people that when you think of a plant, producing a hydrometallurgical plant and a mining operation, they're huge. In this case, they're small. They could fit on a couple of flat deck trailers, probably. That's just a guess. And but we know from experience that it would not be it would not have a very large footprint, Jim.
Larry, where can people find your shares being traded?
They can find them being traded on the TSX Venture Exchange under the symbol AMY, or in the U.S. under the symbol AMYZF, or on Frankfurt. And we do have a service now that translates the English into the German version under the symbol 2AM. They can find information on the company, which we try to keep up to date, at AmericanManganeseInc.com, or they can contact me at LREAUGH@AMYMN.com, or pick up the phone and give me a call at 778-574-4444.
Larry, thanks for the update.
You're welcome.
I'm Jim Goddard. My guest has been Larry Reaugh, CEO and President of American Manganese. We were speaking on July 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. We're speaking with Cascadero Chairman Bill McWilliam. Welcome back to the show, Bill.
Thank you, Jim.
Can you tell us about your Taron property?
Certainly. This is a cesium, thallium rare metal property that we've done a lot of work on it. We've done a lot of metallurgy. We just finished a 33 drill hole program on the property, and all the assays and samples and all of the drill core is in place. At the beginning of the program, we retained a consultant called GeoSim. That's run by a well-known geologist, Ron Simpson. And he is still involved, and at the moment, he is the only person working on this project, and that's been true for about a month. He's compiling all of the data and creating a resource study. And that resource study, we should have it available next week. I'm expecting, we've got 5 drill holes and a lot of assays from this property, and what I'm expecting is the same basic idea of this property, and that we're thinking there's 5 metals that we're going to focus on. The cesium, rubidium, thallium, manganese, and zinc. And we think that each of those has economic potential. So it should be a very interesting resource study, and we're really looking forward to it. And we'll get it, try and understand it a little bit more, because we're not really familiar with these things, and get it into a public format. The 43-101 will be commissioned after that, and that will take we have to do it within 45 days, and that'll take some more work. And it is more of just a general explanation of the geological setting of the property, its location, the partners, the communities, and just a general background information on the property, plus the resource study.
Whereabouts is the Taron property?
The Taron property is in northwestern Argentina, and it's the closest community is called Pocitos, which is essentially halfway across Argentina towards the Chilean border, 275 kilometers from the city of Salta, which is where our office is. It's accessible by road. You can drive right to the property. There are no communities within 50 kilometers of the property, so we're not expecting any community issues. And the property has no vegetation, basically, and there's lots of water there, so it's an ideal place for a mine.
Bill, you also have a gold property you're developing or looking at.
Yeah, that's also become a little bit of an issue, and let me explain that. We have 27 properties in this company. 22 of them are in basically 4 core areas, and we have 5 that are standalone type opportunities. What we did at the beginning of the Taron program in February, there was quite a bit of a delay between the weather was poor, the drilling didn't start. The assays, when we started drilling, got confused. There was confusion on the blanks and standards. There was several issues that we had to deal with. During that time, we decided that we had 3 properties that were very good properties, and I want to work on all of them, but this was an opportunity to have our geologists and prospectors who are sitting either in the Taron camp or in Salta and getting paid to get into the field and do the geochemistry on these two properties, Santa Rosa and Sarita Este. There are two properties here. So we sent them to the field, and they spent 3 weeks out there doing the mapping and the sampling, collected the samples. In one case, it was 275, and the other one, there was 45 samples. And they all got packaged up and sent to the lab. Within days later, they were working on the Taron prospect. Now, the idea of this company is we do not have a gold company, and we do not have a cesium company. We have one company that's got the capability of a exploration staff to develop, review, develop, and organize all of these properties. We never went to Argentina looking for copper or gold or whatever. We went there to find whatever was there in terms of the alteration systems. It was a little different business plan, but it's worked out very well. So the decision was made to send those people there. It turns out that it didn't cost a lot of money. It didn't interfere with the Taron program. It was essentially free because we had to pay those people anyways, and they're good. They'd love to get out in the bush anyhow, or in the properties. And we got two fantastic reports and several very exciting assays from these two properties, both of which advanced them significantly. So there was no idea that we had information on Taron that we didn't think was favorable enough, and we switched to other properties without telling anybody. That's not what happened. The decision was made long before there was any information on Taron. So that's one of the misconceptions that's in the marketplace, and I'd really like to clear that up.
Bill, can you tell us a bit about your job? You're a little different than most chairmen. You're a real hands-on guy, I understand.
Yeah, exactly. And I know the properties, and I know a lot of the contacts we've made in Argentina over the 13 years that we've been there are now coming into play. We've got a very valuable network. We're getting referrals from our lawyers who have supported us as a foreign company in the country. And we're able to enter into NDAs or CAs or whatever you want. But this is not an easy task right now. This part of the market is very difficult. The flavor of Argentina right now is still not very good for major companies to make major investments in the country. And they're just waiting to see if the government is going to be stable enough to support, larger investments. We have no problem working anywhere down there. We can get permitted for whatever we want to do, and we can advance these properties to the drill stage, which is what my job is. So my job specifically is to review the portfolio. I know how much money we're spending on provincial taxes, and we're trying to lower that amount because we still have too many properties. And I'm in the position of being able to say we're going to advance this property to the option point, to the drill point, or to the kill point. And that's what I do. And that's why we took on the gold deposits, the gold geochemistry programs, when we had the opportunity, because we've got 27 properties. I'm trying to advance all of them as money per. That's why they're there. That's my job.
Bill, you have a resignation to tell us about?
We do. And in terms of, this goes right back to 2004, and involves the Taron property. When I got the first assays from AMY Labs at that point in 2004, the first person I phoned was Dave Truon. He's an expert geochemist. He has an interest in these type of properties, the brine, lithium properties, an expert in those. And we had lunch several times together in 2005, and we discussed the possibility that the brine systems that are operating as the Andes have been rising for 35 million years, it creates a lot of hot water and a lot of acid in the water, and that brine system strips the metals out of the basalt cover, and they are deposited elsewhere, but they're in a brine. There's no crystal structure to these minerals at that point. So we talked about that at length, and Tom Richards was also involved in the idea and helped develop the idea. And Taron was the first example of a polymetallic epithermal rare metal system. And when I phoned Dave and sent him the assay, he sent me an email back saying, one word, it said, "Yikes, you found it." And it was a moment of everyone was ecstatic. We had a partnership with Schlumberger, who was using a product called cesium formate, which is the main use of the cesium metal. And that lasted for 3 years. They spent $750,000 or $1 million on the property. And we had a problem with the arsenic that we've now resolved. So Taron has gone through a series of very interesting studies out at UBC. Metallurgically, we've solved the two principal factors that kill properties. Firstly, the number one problem was how could we recover the cesium from the brine? And we speculated that, we should just try simple sulfuric acid leaching, and that turned out to be correct. The next step was to find out a way of eliminating or reducing the arsenic level below 1 gram per ton, which is means that it's just sort of an impurity but not a factor. And UBC came up with a flow sheet that solved that problem. So the two principal material facts about a mining property were resolved, and now we knew we had something we could develop and get a partner interested in. There was a period of time between 2009 when we drilled Taron, between 2015 when we got 100% control of the property, and nothing happened. So nothing happened for 6 years. It was the first property that we had when we reorganized and decided to get the company back in business. There was 3 properties that came to the top. There was Taron, Santa Rosa, and Sarita Estates, 2 gold properties. Taron had the advantage in terms of starting with because it had more data, and it had metallurgy that showed us that this deposit, a very unique deposit, could be an economic deposit. At the same time, the world global cesium market was starting to come apart as there were only 2 producers of the metal, and both of those mines were having problems. One of them is shut down, and the other one is basically out of ore. So there's going to be an issue coming up here fairly soon that a new source of cesium is going to be required to fulfill the lack of new supply coming from those 2 properties. We're not quite there yet, and we don't know exactly when that's going to happen, but that's the position we wanted to put this property into, that it could be the property that 1 or 2 of these companies had to buy to maintain their own businesses. And these are big businesses. And so we're dealing with major companies. Both of them are aware of what we're doing, and they're keeping track of what we're doing. And we're at the point where we're going to be able to talk to them fairly soon. So Dave Truman was fundamental to that entire process, although he wasn't a director and he wasn't really associated with the company. He became a director in 2012 and took on the Taron development part of the business. But the truth is we don't have a gold business and a cesium business. We have a mining company that has gold properties, and it has we have cesium properties, and we have zinc properties, and we have a range of properties. And it's the same crew that works on everything. There's no division of labor. And everybody is on the same page at the same time. When I got an email from Dave on June 29th in the afternoon saying, I'm handing in my resignation. I can't, my productivity is very poor. I'm not in good health. And I need to resign to relieve some of the stress, because we were ramping up 3 exploration properties at the same time, and believe me, it's a lot of work. So, and he sent us a list of the things that he had wrong with him. I've known him for a long time, and I'm aware of his health issues, and they're long-standing. We accepted that and said, we never questioned his reason. But now the market is kind of put a false premise together that Truman had the information on the cesium property, and right before, he'd been with it for 13 years, and right before it's ready to be commercial or expectation of getting money out of the property, he resigns. That makes no sense. But the market interpreted it to mean that Taron was a bust. That is not the truth. The property is under the tutelage of Ron, and it is going to have a resource study next week. I'm expecting exactly what we had last time. We know the volume is probably there in that many drill holes. The issue is the grade, and the issue is it economic? Those answers are not available yet, and they won't be available until we go through a PEA, which is part of the 43-101. But we will have a resource study on that property. It'll have a resource on those 5 metals. That's very uncommon. So that's where we stand. His resignation is only interpreted by us as for health reasons, and we accepted it. And he's still interested in the property. He's not doing any work for us right at the moment, but when it comes time to review the final UBC metallurgical stuff, I believe he will be interested enough to take it on for a day or two. So he hasn't left. Taron is not a bust, and the market is making an incorrect assumption.
Bill, can you tell us where Cascadero is traded and under what symbols?
Cascadero is traded on the Toronto Stock Exchange, the Venture Exchange in Vancouver, and it trades under the symbol of CCD, and it is fairly liquid in this market. And although we've had all of this controversy, the stock has come off recently with people going, well, okay, we got to get out of this thing. But the fact is that Taron is not the entire value of this property. We've got a well-balanced portfolio, all very good properties. They're all going to be looked at. And the company has a bright future.
Bill, where can people contact you?
People can email me at bill@cascadero.com, or they can phone the office here in Vancouver, 604-924-5504. And we take calls all day from anybody, and we have several people that phone me all the time for an update. And the other complaint is that we don't put out regular news releases. But when we don't have anything to say, there's no point in putting out a news release that we got nothing to say. It takes a long time to develop one property. And there's several stages of data that you got to go through. And you do it in the same order, you do it correctly, you usually succeed.
Bill, thanks for the update.
Okay, Jim, thank you, and thanks for the opportunity, and thank you all the Cascadero shareholders are staying with us. We're going to be fine.
We've been speaking with Cascadero Chairman Bill McWilliam. I'm Jim Goddard. Our conversation took place on July 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
My guest is Jim Pettit. He's the CEO and president of Aben Resources. Welcome back to the show, Jim.
Thank you. Great to be back.
A lot of new things happening with Aben this past week.
Well, there is. We just put a news release out. We're pretty much confirmed to go for drilling it'll be the first week. We still haven't nailed down the exact date, but it's coming up. We are going back in to test the high-grade zones that we had previously identified. That's the place to start the program. They are the highest priority targets we have, and once again, I'll just reiterate these grades that were drilled years ago. The one hole was 10 meters of 30 grams gold, and another one was 29 meters of just about 10 grams gold, which they're fantastic holes. They're about 4 kilometers apart. It's all there's a gold anomaly that basically spans between them, and that is the top priority area. We do have a lot of other target areas to get to, but to start with, this is where we're going to be. Should be noted that earlier in the week, GT Gold, just to our north, came out with some pretty stellar numbers at the beginning of their drill program. Granted, they're about half what we're talking about, but they had a great start. Their stock went from 37 cents to a high of $1.04, still trading millions of shares a day. So it gives you an indication of the market, the people watching what's going on. They know, the market knows there is this certain amount of drilling just getting started up there. Colorado's, they started 3 weeks ago. They've got news coming out. We're starting. We'll have news later on in the summer. GT Gold has got more results coming. So there's the audience is building. I mean, their market cap has gone from about 26 million market cap to 71 million. in 3 days. Pretty spectacular.
Jim, where is this taking place?
This is all in the Golden Triangle, northwestern British Columbia. The most recent results from GT Gold are just to the north corner of the Golden Triangle, right by the Red Chris mine. Colorado's just down, by us, actually, on our southern boundary. Our property's basically right in the middle of the Golden Triangle. Colorado extends from our southern borders to the south and east. And there are others. There's others starting to work. There's SK Mining. There's Garibaldi, and a few others. So it's good to see. It's really good to see.
Jim, can you give us a bit of a background for Aben?
Well, I assembled this land package last year, and that's really all we did. We didn't get any work done other than in October. We did some field work to do some confirmation of old data. We spent the past year doing a big data compilation GIS study, compiling the 3 properties that I put together into one. So there's just 80 to 90 drill holes historically done, plus 20,000 soil and rock samples. So there's lots of data to work with, lots of geochem, and there was some geophysics done, especially on the southern part of the property. What we're looking at going forward is we've narrowed it down to some priority targets to get started with. There literally is, about 20 significant targets throughout the property that we would like to get back to, but that's going to be over the next couple of years. Aben's symbol, if we want to get right back down to that, is ABN. The OTC, it's ABN.AF, and in Frankfurt, it's E2L2. We've got 47.6 million shares outstanding, and fully diluted is about 61.5 million. That includes the financing we just completed.
How can people contact Aben?
People can contact me or Don Myers at 1-800-567-8181, or the telephone basic landline is 604-687-3376, or can contact at info@Aben Resources or www.abenresources.com.
Jim, thanks for the update.
You bet. Thanks.
We've been speaking with Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. We were talking on July 27th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.